Bank stocks fell Tuesday after Moody's investor service downgraded the credit ratings of 10 regional banks, citing growing financial risks and strains that could erode their profitability. The biggest bank to receive a downgrade was Buffalo-based M&T. According to the Federal Reserve, it's the 19th largest in the U.S. by assets. Some of the other banks include Webster, BOK Financial, and Old National. For more on this, J.D. Durkin joins us now. He is the on-air host for TheStreet. J.D., welcome.
Thank you for having me.
First off, what does this downgrade mean? What does it mean for people who have money in these banks?
I mean, to be fair, as we've heard earlier this year from the FDIC, the Treasury Department, and I think even from Chairman Powell himself, this is not necessarily a reason to worry. But these are the major credit agencies sort of diagnosing the issue that small and regional banks are not uniquely situated to handle a high interest rate environment. However, it is worth noting for people that may see these headlines and think, Jeff, hey, what does this mean for me? Is this sort of frightening? The backstops that were on place for Signature and Silicon Valley Bank early this year, the guardrails that were put in place after the great financial crisis did the work that they were supposed to. Consumers were made whole, and I think that's most important as people see these frightening headlines.
But what happens is people see headlines like this, and they can say, okay, I have my money with them. Why don't I just take it out and take it somewhere else?
And now you're talking about a classic Jimmy Stewart-style bank run, right, that we're very familiar with. And that is really what regulators want to encourage the American people to avoid, to have confidence in the banking system. And we hear that over and over again from government officials and from regulators to indicate, hey, as you see these headlines, it's worth taking them with a little bit of a grain of salt to understand the underlying fundamentals of the U.S. economy are still strong. But a lot of this oftentimes, and it's a bit of a different situation bank for bank. It could be mismanagement. It could be some struggles with regards to regulations. But ultimately, a high interest rate environment has really devalued the pre-existing securities that a lot of these banks added onto their balance sheets during the last 10 to 15 years of a low interest rate environment.
So some of these banks that went, do you see any similarities at all between some of the banks that went belly up previously, Silicon Valley Bank, Signature, which had problems as well?
Yeah, absolutely. I mean, this is a lot of the challenge. This is the fact that, you go back from the great financial crisis, and these are pre-COVID issues, but we had interest rates that were at or near zero. And so that meant that a lot of these banks were adding onto their balance sheets, then, newly issued bonds, government-backed securities, mortgage-backed securities. The problems today in a high interest rate environment is that those banks at the time took a big bet, Jeff, to say interest rates aren't going to go up. The problem was none of us saw a once-in-a-lifetime public health crisis coming about. None of us saw sky-high inflation, and none of us anticipated that the central bank would be a little slow to respond to that inflation, and in doing so, really jack up interest rates high interest rates since March of last year. That puts a lot of pressure on these smaller names.
The credit rating agency also warned it's watching some of the bigger lenders, even including U.S. Bancorp and Bank of New York Mellon, for potential downgrades. Those are bigger banks now.
Yeah.
Do you worry about that?
According from everyone I spoke with today, and over the course of my reporting from this year, they still say there's not a major reason to be concerned right now. That the fact is that consumers will be made whole. Obviously, there's a big debate raging to what degree do we insure deposits right now for every major institution. If you have upwards of $250,000 in that bank account, it is secure. There is a lot of kind of jockeying back and forth in the hallways of Capitol Hill and other places to sort of increase that. But, again, I think this is the sort of thing people will see this and understandably have a lot of concern. But you really have to take, I think, the chairman of the Federal Reserve, the Treasury Secretary, Janet Yellen, and other regulating officials who say this is not a need to individually worry. The last thing they want is, as we said before, a bank run on the banks.
So what do these banks have to do to improve their status? Or to make people feel more confident?
Of course, I think the first part we'll probably see is probably further consolidation from a lot of these smaller names. So we have the 10 names that were identified today, Jeff, and an additional 16 or 17 that are on a potential watch. The other thing that's worth keeping in mind is that there need to be stronger regulations on these banks. Now, people may hear that and say, well, wait a minute, what happened back in 08, 09? I thought we put new regulations on the system. This wasn't supposed to happen. That was true for the bigger banks. These smaller and regional banks were really successful at lobbying regulators to say, hold on. We're not J.P. Morgan Chase. We're not Bank of America. We're just the small guys in the corner. Maybe we should have a different set of regulations that apply to us than the big guys. That is something that Chairman Jerome Powell of the central bank has called out this year and saying clearly that was not right for regulators to allow a different set of rules for the non-big banks. You'll remember the phrase too big to fail with regards to the J.P. Morgan Chases. You now have a newly emerging phenomenon of banks that are possibly too small to succeed as interest rates have gone higher and are likely to stay higher for the foreseeable future.
JD, you may cheer for the wrong football team, but you know your stuff when it comes to bank.
Wearing my Giants blue.
You have your Giants blue on. I should have put a red shirt on to represent Bills. Anyway, good to see you. Thanks for coming in.
Thank you.
All right.